Imagine this. You're a first-time home buyer. You're in your 20s. You're super excited about your new career and all the places it's going to take you. You want to buy a house. You found a new construction home that would be perfect for your first home. However, your credit's pretty thin. In fact, your credit score isn't excellent. However, you're responsible. You have every reason to want to be a homeowner, and there should be a way for you to qualify for financing. And there is, but you're going to have to do a little work, and you're going to have the right lender to walk you through it. On today's episode of Talk Mortgage to Me, I have Kristi Nowrouzi with me. She is a mortgage broker out of Orlando, Florida, who operates a brokerage by the name of My Preferred Lender. And Kristi's going to walk us through this exact scenario, how she helped a young 20-something engineer purchase his first home, even though when she met him, his credit was a little bit underwhelming and a little bit thin. And oh, by the way, he was able to purchase this home with a very minimal down payment. Check this out. All right, Kristi, so walk us through this. All right, you had this young home buyer. The way you explained it to me, we'll call him Mike.
Because that's not his name.
That is not his name, but we'll call him Mike. And he's purchasing a new construction home for only $275,000. And he's buying it by himself, right? Yes. Mom and dad aren't co-signing.
Correct.
And he doesn't have a significant other or a spouse that they're combining income.
Right.
Okay, so when Mike, as we'll call him, calls Kristi with My Preferred Lender and says, Kristi, found the home. I want to become a home buyer. How did the interaction go? And more specifically, what were Mike's challenges?
So I was introduced to Mike about 6 or 7 months ago, and he closed 2 months ago. And when he first came to me, his challenges were he doesn't make a whole lot of money. He's a full-time student. He does work full-time, but he's an intern engineer.
Okay, so he's getting intern money right now.
Right.
Okay.
Yes. And so I learned through him that the way that the state of Florida is set up, he's got to finish a bachelor's degree and have 4 years of internship in order to become a civil engineer.
Interesting.
Pretty cool.
I was today years old when I learned that.
So Mike, I pull his credit. We put together a loan application. His credit score is in the mid-500s.
Which, by the way, y'all, is not good. Like, average is about 680.
Yes, it's not good. I would never go out of my way to say, hey, Mike, credit's not good, right? I say, okay, we've got some work to do, but this is absolutely doable. So what Mike was reflecting was really thin credit, which is what you alluded to. He paid cash for his car, so he didn't have a financed loan there showing up. He has a credit card that's in good standing. He had a credit card from about 2 years ago that wound up in collections.
Okay.
So maybe $300, $700. It was a very small.
Was he even aware of it, do you think?
He was definitely aware of it.
Okay.
He was definitely aware of it. It wasn't a priority.
Okay.
Right?
Makes
Until
sense.
your wages get garnished or you want to buy a house, it's often not a priority. So he made it a priority. And then he had a little medical collection that he wasn't aware of.
Okay.
Yeah. So it was maybe $700. So he had just really thin credit. And he was getting spanked because he had more bad than good showing up, and his credit card that he had a very small available credit line, and he had it pretty much maxed out. So really simple things first, pay that baby down, if not off.
Okay,
right?
so step one, so Mike comes to you, and you being the 20 plus year real estate and mortgage veteran, look at Mike's case, look at it, and says, okay, we can work with this. Here's the game plan.
Yes.
Step one was to pay down his credit card.
Pay down your credit card, and then he said he wanted to pay off that credit card. Being that the collection.
Okay.
Being that it was 2 years old and the small amount that it was, I wouldn't have led him to that. So if he didn't say, hey, I want to pay this off, I would have said, let's just leave it alone. Sometimes with a collection, if you contact that creditor and restart that conversation, there's something that reports on your credit that's called the date of last activity. And it's kind of like if you start picking at a scab, it starts up again.
Okay.
Where if you just leave it alone, the older it is, the less effect it has in your life.
Makes sense.
So I didn't want him to start up that date of last activity, which could have a negative effect on his credit score.
So you wanted him to pay down the credit card that was in good standing.
Good standing, yep.
But the collection, it's like right now, let's not mess with that.
Right.
Because the fear would be he would pay it off and potentially have his score go down a little bit before it starts climbing back up, which would have prevented you from helping him become a home buyer.
But he really did want to he really did want to take care of that. So I'm not going to stand in his way if that's what he wanted to do. So the first step was to pay down his credit card that was in good standing because that debt utilization was harming his score. The next one was he wanted to pay off that collection, and he wanted to pay it for whatever they were going to accept, whether it was settled or paid in full. He was good with it. So he reached out to them, got that taken care of.
Do you know, did he pay the full $700?
He did. And guess what they did?
What?
They removed it.
Wow.
They removed it off his credit. So sometimes...
Did you help him?
I did with the language, yes.
Yes.
So I told him, so he said, whether they allow me to settle or they're going to require me to pay the full amount, I'm gonna do what's right. And he felt he would sleep better at night knowing, because now he's in the financial position to be able to do so. He didn't purposefully go out of his way to be like, I'm not going to pay you, right? So now he's in the position where he can pay back that, I think it was about $700. And so he said, I want it to be done. So I said, well, if they'll settle, let them and pay it off. They're going to take that payment right away, like over the phone, be ready for it. And if they require the full amount, be ready for it. And so they gave him two options. They said, we'll settle for a slightly lower amount. Let's call it $500.
Okay.
Okay. And they'll report it as settled for less than owed, which is not great language on your credit report. It certainly would not have helped him.
Okay.
But in his case, they said, if you pay it in full today for what's outstanding, we'll remove a couple of these silly little fees that we added, but for what you truly charged on your credit card, if you pay that today, we'll remove this collection.
Which is phenomenal. So now it's like wiped from his permanent record.
Yes. And this can happen legally when a collection, or even sometimes a collection agency, sells your information to another collection agency. It's called pay for delete. Now, the original creditor, that, let's call it Capital One, from 2 years ago, it didn't go away.
Okay.
That one went into a negative payment status, and that was still there. But remember, it was 2 years ago. So it was aged enough that it wasn't really hurting him. That collection was fairly new.
I see.
So for having that get removed, which is legal for them to do, that was a huge help. The next thing I encouraged him to do, because I'm not an advocate of going into debt, although I sell the largest debt you'll ever go into in the form of a mortgage. What was really important for him was to have a slightly larger credit showing up. And so there's a couple of different programs out there where, like, for instance, you can report your rent.
Okay.
You pay $10, $12 a month, you can report your rent. He pays cash money to his roommate's dad.
Okay.
We can't prove it.
Yes.
So we can't prove it through it coming out of his bank statement. So that was off. And he really wanted to move sooner than later. His goal was to move within 4 to 6 months. So we had to act quickly. So the next best thing for him was to become an authorized user on somebody else's credit card. Well, his mom had a long-standing credit card, large amount available on it. Let's call it a $5,000 limit and a very small balance.
Okay.
Gas, groceries, pays it off. So she's got this beautiful payment history of 5 years. As soon as he got added as an authorized user, and that bill cycle for, let's just call it a Discover card, got reported on his credit report, as soon as that happened, he had 5 beautiful long years of credit history added
I love this for him.
within a couple of weeks.
So then you met him months before he purchased.
Yes.
And then you were able to triage the situation.
Yep.
And then put together a game plan. He obviously was a willing participant.
Yes.
And he had the means to
Yes.
do these things.
He did, however, paying those couple things down did take away. And so mom said, I'll help gift you some money. So she filled the gap for what was needed for his closing costs and down payment.
Okay, well, so let's get there in a second. I'm curious, just credit score alone, where'd he go from? He started at
Mid-500s.
Mid-500s.
Yeah, mid-500s. And when he landed, I want to say he had a 648.
Wow. So yeah, you almost helped him get
About 100
100 full points.
Yes.
Yeah.
Without going into debt.
Yeah.
Yes.
Yeah, and no crazy hacks or, supposed strategies that we in the lending world learn that, look, you may have manipulated your score, but you still don't qualify. Without getting the details on that, you did, let's just say you did it the right way.
Correct.
And not the cutting corners way.
Correct. Disputes, just quickly, since we're on credit, if you have disputes that add up to, or even one single trade line that's greater than $2,000 on an FHA loan, you cannot move forward.
Yeah, just know disputes are, they're just not a good thing when you're trying to apply for a home loan.
Yes.
Like, just know that you're throwing a new wrinkle, a new hurdle, a new potential way to stub your toe.
And I had a client call Equifax 4 times to have it removed, and he had a confirmation number from every conversation. Yeah. So keep in mind that disputes don't always help you.
Yeah, so half the battle was getting Mike's credit score up into the mid-600s.
Yes.
But the second half was now Mike needs to come up with 3.5% down on a $275,000 purchase.
Yeah.
And Mike's falling short.
Yes.
So how did you help Mike bridge that gap of he needed money for down payment, money for closing costs? You talked a little bit about a gift. How did that work, and how does that work?
Yeah, so there's 2 parts that make up your cash to close. You've got your down payment requirement, and in this case for an FHA loan was 3.5%. And then his closing costs are roughly 3%, at least that's what it is in the state of Florida. So we were able to get $6,000 from the sellers, but they were not moving on anything else.
Okay.
And the builder, the seller, had built a couple of other similar homes in neighboring neighborhoods. So we knew, because he's already closed on those, there wasn't an opportunity for us to go higher on the purchase price and ask for a little extra help from the
Yep, that's,
the builder,
by the way,
the seller.
a really cool strategy for people who are trying to make homeownership more affordable.
Yes.
Is be willing to offer full ask, maybe even a little bit over full ask if it'll still appraise, but then negotiate that the seller gives you credits that you can then use to cover all your closing costs, buy down your interest rate, purchase up front all of the required mortgage insurance. There's so many things a great lender can do creatively when working with seller credits. But you're saying you didn't have that much of an opportunity because the seller was firm in their price.
We knew what it would appraise out at based on.
You knew what it was going to appraise at. You didn't have room to raise the sales price. So
seller couldn't come down anymore.
Yep. So Mike has his money.
Yes.
And then Mike has the seller credit, but there was still a gap there of a couple grand.
Yep, about $4,000. So we were able to, mom was in agreement to help out her son.
Okay.
He was in a position where where he was at was no longer going to be an option.
Okay.
And the walls were closing in quickly. It was becoming a very uncomfortable situation. So we knew we had to move. So he found this great home. Everything's brand new, right? So he doesn't have to worry about replacing or fixing anything anytime soon. He just gets to customize his house. So he goes into, he comes back to me and says, I think my credit's where it's supposed to be. So we spoke about a month and a half later, and we repull credit. And in fact, it is. He's got the 648 credit score. We're ready to go. So I put together all of my information. Here's something that can trip us up if we don't know.
And us as lenders, right? Banks, lenders, credit unions, anyone that you would be applying for a home loan with.
Yes.
We can get tripped up.
Here's what's changed. In just the last couple of years, FHA, which is often used for first-time home buyers. You don't have to be a first-time home buyer to use this loan, but a lot of first-time home buyers do, especially if you're in the 600s. It tends to be a better option for payment and interest rates than a conventional loan. Well, in this case, FHA's changed their rules, if you will, and a gift funds are treated very differently now. So in the past, a gift fund was looked at as if it was your own money or you borrowed or pulled out of your 401k. Now it's treated differently as if you didn't have your own money to purchase, we're going to reduce this just a little bit. In other words, we're going to make it a little bit harder,
a little bit more difficult to qualify.
For you to qualify.
It's called skin in the game.
Yeah.
I mean, when you're a lender, you want to have the borrower, the consumer, to have some skin in the game.
Yes.
And in this case, like the seller was contributing.
Yep.
And if mom's giving a gift,
Yep.
then all of a sudden they're like, you needed 18 grand, but you got 6 from the seller, you got 4 from mom. Really, it's only 8. Like, you're not even bringing the half of what needed out of your own money.
Yep.
So I'm guessing that all of a sudden what FHA would be willing to approve for Mike just got reduced. The difference between using your own funds or gift funds.
Yes.
Okay.
So in other words, because of it being gift funds, we weren't getting what we need as a lender in order to proceed, which is something called an automated underwriting approval.
Yes.
And in order to get that automated underwriting approval, we had to tweak it a little bit. So if those gift funds were deposited and we waited 2 months, it's called seasoning. It's no longer a gift, it's his funds. We did not have the time. So we had to use the gift funds, but I was not getting the automated approval. And he's already gone out, seen this house, and said, I'm going to make that mine.
I love it. I want this house.
So I've got to find a way, and I'm going to find a way. So bigger down payment, not really an option. I tried reducing the interest rate just to see what could happen. Maybe lowering his debt ratio through that lower interest rate wasn't happening. A whole lot of different playing around to create the solution. I'll cut to the chase. I was able to reduce the loan term from a 30-year loan, which is the typical amortization for a mortgage loan. I brought it down to 26 years. So it did slightly increase his payment.
Yeah.
But he's also cutting out a ton of interest because
so the
paying it off faster.
Automated underwriting system, we call it AUS in the industry, by the way. AUS didn't like it on a 30-year, but when you dropped it down to a 26-year loan,
it did it.
Y'all, that's next level thinking. I promise you, very few originators are thinking that outside of the box. And heck, many of them probably didn't even know you could do, or they don't have access to be able to do a 26-year loan.
Yeah.
Kristi, you are a miracle worker. You are 100%.
Mike thought so too.
Yes, I would agree. Y'all, if you or someone you know is in a situation like this, you have to understand there's no such thing as one size fits all lending. Mortgages must be tailor-made to match your specific needs, wants, and goals. Whether you're a first-time home buyer like Mike, whether you're somebody who needs a Kristi in your back pocket because you need somebody that's willing to play around inside of the system, such as dropping the loan term from 30 years to 26, or maybe it's you need help getting your credit to where it needs to be, and you're a willing participant like Mike. You need to have a great team in your corner. You need to have a great realtor. You need to have a great financial advisor. You need to have a great CPA. You need to have a great lender. A lot of people think, I know I needed a good CPA. I know I need a good attorney. But no, it's very important to have a good lender too. And if you're looking for a good lender, you don't have to look very far. She's sitting right here next to me. Well, congratulations to you, Kristi. Congratulations to the builder who got to sell a home, the real estate agent who got a commission on that transaction. More specifically, congrats to Mike, because Mike has now put himself in a position to generate wealth over the next 30, 40, 50 years through real estate.
Yeah, it's awesome.
Kristi, so if people want to get a hold of you, what's the best way to reach you?
I'm on every social media. Check out Kristi Nowrouzi.
All right. Phone number, email address?
Sure.
Yeah.
Phone number is 407-590-4682.
Beautiful. Kristi, thank you so much for stopping by. Y'all, you just tuned in to Talk Mortgage to Me. I am your host, Dustin Owen. If this is your first time finding our channel, do yourself and do us a big favor and click subscribe. And remember this, sharing is caring. If you're enjoying content like this, there's a great chance that somebody that you're friends with or someone in your family would also gain value from this content. Make sure they're fully aware about what we are putting out on YouTube. Other than that, keep checking back for more stories just like Mike's.